Hello folks, this is David Schlossberg from Assured Concepts Group. We are beginning our monthly video series by recapping what happened in December of 2014. In this month's video, we'll discuss some of the economic events that occurred last month to provide some insight into what it means for you as an investor. December was a fickle month for the markets, forcing investors to weigh positive domestic fundamentals against fresh worries from abroad. Let's take a look at what happened. Falling oil prices caused a lot of market uncertainty as investors grappled with what those low prices can mean for the economy. Since recent highs in June, oil prices have fallen nearly 50%. While cheap oil and gasoline are great for American consumers who have more money in their wallets around the holidays, it is bad news for oil producers. Countries like Russia and Saudi Arabia depend on oil revenues to balance their budgets. American producers also need higher oil prices to make new and existing oil projects economically feasible. If prices stay too low for too long, it could destabilize many petroleum-based economies and shut down some U.S. oil projects as well. Holiday shopping kicked off in November, and despite a rocky Black Friday weekend, retailers hope that cheap gas and an improving labor market will result in a report reflecting a holiday sales boost. Sales between November and December are projected to grow 4.1%, which is the biggest increase since 2011. On the other hand, many stores offered large discounts to lure shoppers in, which may have cut too deep into their profit margins. The Commerce Department released another revised estimate of GDP, showing that the economy grew a whopping annualized 5% in the third quarter. This is the fastest rate of growth seen since 2003. Even better, the biggest revision was in personal consumption, which is the most important driver of overall economic growth. Now the question is, how much of that juice will be carried into future quarters? It's too soon to say for sure, but we hope that cheaper gas and a better job situation will provide a continued boost for the markets. Overall, 2014 was a good year for the U.S. economy. As the recovery moved into its fifth year, we finally regained all the jobs lost in the recession, and Americans are starting to believe in the economy again. Looking ahead, it's important to be cautious, though, about the markets in the coming weeks. Despite periods of volatility, markets did well in 2014 overall, and a pullback is possible. Fundamentals are solid, and we expect positive consumer sentiment and an improving labor market to contribute to gains in 2015. On the other hand, significant uncertainty remains about how weakened global demand, low oil prices, and likely future interest rate hikes will affect the U.S. economy. As always, we recommend focusing on your own personal planning needs while allowing us to keep an eye on the ever-changing market conditions. I hope you'll enjoy watching our economic updates this year. We look forward to a very prosperous 2015 together. That's it for the December economic update. If you have any questions or concerns, please give our office a call at 847-426-1077. We'd be happy to talk to you. This is David Schlossberg with Assured Concepts Group, signing off for the month of December 2014. Thank you for listening.